What's up, guys? It's Sam. I want to talk a little about market timing and whether you should wait to get in the market or whether you should be dollar cost averaging or whether you should be putting it all in right now. So let's get into it. So I hear a lot of people waiting for the market to dip a little bit lower or just being scared of it in general. People changing their 401k contributions while they get bonuses because of the stock market right now, and all that kind of stuff. And I want to talk a little bit about it and what I'm doing. So I've not touched any of my retirement accounts that are through work or anything like that. I'm just letting them go in like normal. And I'll show you my Roth IRA that I've been contributing to, my dividend and growth investing portfolio, and what I've been doing with that. But I want to talk about this first because I hear a lot of people wanting to wait longer to get in the market. And how I see it is like this. You can wait to get in the market and maybe you hit bottom. It's impossible to tell where the bottom is, so maybe you get lucky in one of the next 100 days you put in your money and it's the bottom. But most likely you're gonna wait too long. You're gonna wait for the market to hit bottom, and it's gonna jump 5 or 10% because, as we can see, the market tends to jump up and go down very quickly right now. It's very volatile. So I personally would not feel comfortable trying to wait for that. I think that that's a fool's errand. The way that I think about it is, say a friend of yours or a family friend or something, it says that they'll pay you $50 an hour for a couple hours to help them on a Saturday. Now, you can take that and be happy about it. It's a good amount of money, especially if you don't get paid that much. That is a great gift, and you should be happy to get it. However, some people could say,
"Whoa, geez, that's a lot of money. They must be willing to give me even more. If they're gonna give me $50, maybe I'll ask for 60."
Or
that's really hard work. I don't know if I feel comfortable doing that. Why would they give me $50 an hour? I'll just wait. I'm not gonna do that.
and that's kind of how I picture people that want to wait for the bottom. Like, the market is gonna rebound, right? Unless the American economy goes down or something. And unless you need your money right now, which I suggest, don't invest if you need the money next week. But if you're waiting for it to go further down, you're saying, I don't care about the fact that it's gone down 25% or the gift that has been given to me. I'm gonna wait longer. And I feel like there's nothing inherently wrong about that. It's not like you're a greedy person, but how you're looking at it is kind of greedy. Like, I understand dollar cost averaging, so that way you don't lose a lot of money necessarily, or you like average out your return, as long as you know that you might not do as well as if you start putting in a little bit more. Now, if you plan on doing it over the next 6 months or year or something, that's fine. But that averages out your return. But if you wait completely to invest until it drops lower, I think that you're missing out. Another way that I think about it, too, is if you've ever caught yourself saying, man, I wish I had gotten XYZ stock, whatever the stock is, back when it was in 2009, or back when it was this price point. Man, I would have gotten a ton of it and I would have been so excited. Or, man, look how much money I'd have. Well, that's how a lot of stocks are right now. And if you're not buying those stocks, then I don't think you have the right to say that. So you can't go back and say, man, 10 years later, I wish I'd gotten this stock. I'd have 10 times as much money now. If you're not willing to buy any of these stocks that are at a third the price or a fourth the price or a fifth the price, you can't really say that going forward. So I've said that before, or at least I thought it at least. I don't think I've probably said it to anyone because Hindsight's 2020. That doesn't do me any good. But I do calculations in my head, man, if I had bought Tesla when it was 200 and sold it when it was 950 or just held on to it, I'd still have 2.5 times as much. So I think of that now. As I see some stocks that go down, I'm investing in those stocks because I feel like they won't go bankrupt, and once the economy opens up again, they'll do great work. They'll be able to expand. They have good cash positions now. They've been growing. Maybe their business is being less regulated over time, like one of my REITs. I think that all the stocks that I have are gonna, 1.5, 2.5, 3.5 times what they are right now in the next 5 years. So that's kind of what I'm thinking as I get into more investing. I have been dollar cost averaging just short term. With what I'm doing, I can probably last another 2 or 3 months doing this as heavily as I'm doing. At the beginning, I was just so excited that the stock market went down 10 to 20% that I put in a significant amount of money up front. So if I were to do that again, I probably would dollar cost average a little bit more. But I didn't really picture this being a whole national shutdown, as most people didn't. So that's kind of just what I'm thinking about this all. Let me show you my portfolio, and I want to show how much the stock market has decreased. So I have, in the last month, since March 2, the stock market has gone down about 19%. Now, if we look at my portfolio, I've noticed that it's really hard to compare my portfolio to the S&P 500. And that's because I didn't put my money in a month ago. I've been dollar cost averaging throughout the whole thing. So I can figure it out how much money I'd have versus the S&P 500 if I invested all my money in the S&P 500 every day that I invest in this portfolio. As you can see, down almost 15% compared to 18, but again, I've been investing throughout. So it's pretty messy when you do it this way. But I can do it. I don't have a crazy amount of deposits, maybe 10 to 15, so I could figure out how many shares of the S&P 500 I'd have at all the various price points. But it's a lot of work. Also, with some of the stocks that I'm investing in, they're a lot riskier stocks. I knew that they wouldn't necessarily recover as fast as the other stocks or as the S&P 500, but I was willing to go at it from a long-term perspective. So as you can see, I'm still buying. I have about $221 worth of buys. I got some dividends, that's why it's a weird number there. But I still am buying. I'll show you what I'm buying here. I'm buying Berkshire Hathaway, great company that has a lot of cash, and I want to lower my cost basis on them. Probably one of the most secure companies going into this whole global economic crash. They have over $100 billion in cash and are looking to deploy it. And then they're also really well diversified. They have a ton of companies that they own. So I'm investing more in there. They're one of my biggest holdings. Skyworks Solutions, a great company that I imagine will grow significantly over time with 5G phones coming out, and just they don't have much debt. They have a good amount of cash. I think that they're going to do really well. Foot Locker has a lot of money on the sidelines. They are very profitable. They're going to be hit right now because their stores are shut down, but they're going to do really well over time. And they have been hit pretty hard by this. Just a real estate index fund that I have that pays out some good dividends, about 5%, and it's been appreciating pretty well. They've been hit hard from this, going down about 35 to 40% still. That's mostly because a lot of the REITs are hit hard, whether they're mortgage REITs that are hit hard from the interest rates or people defaulting on their loans, or just the mall REITs and stuff like that, retail REITs that don't have people in their stores because they're shut down. Facebook stock. I think Facebook is going to do very well. They have one of the best balance sheets in the world too. They have a ton of cash, and they also have two of the biggest social media platforms, probably the two biggest in Facebook and Instagram. They haven't even really monetized a lot of Instagram yet, but I think that they're going to do really well. They've been growing a lot. They've been growing like they're a small stock, small company, 20, 25%. And they've been able to increase not only their numbers and how many users they have, but also how much money they make on each user pretty significantly. So I think that they're going to do really well, and they have held their value a little bit better than some of these other stocks. But a lot of people are going to be using their platform when they're at home. Wynn Resorts is another company that's pretty volatile. They own some resorts in Macau and Las Vegas, and a couple other places. They are hit really hard right now because they had to shut down their resorts, but they're another company that's grown really well. They work at the top end of the hotel industry. They are big in the gambling space, and I think they'll do pretty well over time. One other stock that I actually want to buy more of is IIPR. They're one of the lost a lot of capital, or a lot of my initial investment in $600. But I'm not worried about that because I know that over time these companies are going to do really well. And as you can see, I'm pretty well diversified through the real estate sector, through retail, through big conglomerates, through a couple index funds, through hospitality business, through internet companies. I am well poised, I think, to do quite well, and a lot of these companies have very good balance sheets. Some of them don't have any debt at all. A lot of them have billions and billions and billions of dollars. But as you can see, some of the companies are hit really hard. These companies are companies that can go down 50% a day. There was a day where NRZ went down 50%. I bought it, and then it went up 30% the next day. So I think that those are just ones that you have to ride out, and I think that they'll come back and do much better. I think that NRZ could do better than almost all of these stocks on the rest of the list because they've been hit so hard, but I don't imagine them going bankrupt. I think they'll do quite well in the future, but we'll see. So that's kind of why I wanted to go over. One other thing is I've been looking at my net worth, and it has not been increasing as much as it has before. Before I was increasing my net worth about a little over $3,000 a month. Now it's been a month since last time, and it increased about $500. Part of that is I have about $17,000 in the stock market, and when it goes down 25%, that's $5,000. That makes up that difference, and more. But how I look at it is, if I have $15,000 in the stock market, it's down 25%. That means when it recovers a third of what it's at now. So it's gonna bump me up to $20,000. So a lot of these stocks that I invest in, they're down 50%, assuming they get back to normal in the next year or two. They are going to be worth 2 times what I put in them, not just 50% more. They're worth double as much. And then they also grow on top of that every year after that, on average. So I imagine this portfolio that I put in, there's another 200 that I invested today, so $5,700. I expect it to go up to 8,000, 8,500, 9,000, something like that, by next year this time, if I don't put any more in it. I also get dividends in the meantime, so it's not a huge amount. I don't have a lot invested in this company, but this is a monthly paying dividend company that holds a lot of the lower volatile, less volatile stocks in the S&P 500. And then on a different page, I have other dividends from a while ago, $3, $1.50. So not a ton, but this portfolio, even with some of the dividend cuts of Carnival Cruise Lines and Delta Airlines, probably some of these other resorts and stuff like that, even with all those dividend cuts, it still produces about 3% average annualized dividends, or annual dividends. So with 5,000 invested, that's still a good amount of money. That's still $5 a month or so. Is that right? Yeah, something like that. It's still gonna be a good amount of dividends that I get paid every month from being invested in this. And actually, I think it's more like 12 or 15, something like that. That will just be reinvested over time on top of the capital appreciation that I'll get, or the capital gain that I'll get from being invested in these stocks. Like Warren Buffett says, I think it might be overplayed a little bit at this point, but be greedy when others are fearful, and fearful when others are greedy. So a lot of people want to get in the stock market when it's at all-time highs. Not a lot of people want to be investing in it now. But if you have good companies, if you believe in the American economy, I think that's a great time to start investing. Whether you want to slowly get into it or make a plan over a couple months like I've done, where you're going to invest over a couple months, or whatever else you want to do. I think now is the best time over the last 3 or 4 years to invest in the stock market. So please leave a like or a comment below. Let me know what your thoughts are on this, whether you're investing or whether you're holding out, what your plan is, what you're investing in, and I appreciate it. I'll see you in the next video.